Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey guys, what's going on? Get my stream up here. So I'll be checking the chat in Kick and on YouTube. Right now, I'm not really seeing anything that I want to trade. I will talk about a trade that I took overnight that unfortunately I got stopped out on. And I'll talk about some of the trades I took earlier this week. So we'll go over, all these markets. So right now, the dollar, the way that I'm seeing this is still in a downtrend right now, but we are, obviously trading into this very large buy side imbalance. So after we've taken out this liquidity, got a nice rejection lower. And if you guys tuned in last week, I told you exactly what I was looking for, right? I told you I was looking for this retracement towards this inverted fair value gap. But on Monday, right, we got this candle here, which created a bearish fair value gap. So let me just draw these out. We have this inverted fair value gap here. And then this here, right, we created another bearish fair value gap. I'll actually use another red rectangle here. So Tuesday, right, we took out Monday's high and then traded lower. So I was able to take advantage of this specific day, as well as, well, actually yesterday I did take another stop loss on this specific trade just because I didn't expect it to rally this high. But I was able to take advantage of Tuesday and Wednesday. Thursday took a loss. Friday took a loss. So overall, I'm ending my week with a positive 1.5 R. So currently I'm up 1.5 R. And, I could take another trade, but going into the end of the week, I'd rather just, take what I got and walk away. Because I don't like trying to push on Fridays and end the week in the red, if anything. So, we'll talk about what we saw on the lower time frame. And I did post on Twitter that, I outlined exactly what I was looking for on Friday last week, right? I told you guys what I was looking for. This is exactly what we got. And then for some reason, even in my community, I saw people leaning short as we were trading into the level that I was expecting to go long. So really, it's just a reminder that you have a plan in place and you should be following that plan, regardless of what the price action is telling you in that specific moment. Okay? Because it's often those times where the market looks the most bearish is when we're trying to go long, right? And I know it's very counterintuitive to what you guys are typically used to, right? You guys are typically used to chasing price. You're typically used to seeing markets go up and you're trying to buy it. But I'm here to remind you guys that the best time to buy a market is when it's going lower, and the best time to short a market is when it's going higher. As long as it's in line with what we are expecting from markets, okay? So Tuesday, we got this run below Monday's low, and then we rallied, okay? So if we drop down into our lower time frames, we can see exactly what we're looking at. This here, if you guys aren't familiar with them, this is a bullish engulfing candle. So what makes it a bullish engulfing candle? Now, I've seen plenty of different ways that people view engulfing candles, but for me, it always has to take out the low and the high, and it's got to close pretty strongly. So even if I just look at this one specific candle, this one candle here, all right, usually we will see a retracement into that candle, right? So this is our retracement. Going long here would have produced a very nice swing setup. Okay, and this will work on whatever time frame it's given. But you have to understand that, again, all these setups have a failure rate, right? I know that I'll win on 60, maybe 65, 70% of these setups. But yes, there is always the chance that you are going to take a loss on these trades. That's just part of the game. So again, what we saw over the over Friday was a very large bearish engulfing candle. I'm not trying to trade against this. All right. What I'm looking for is we need to get through. If we get through this buy side imbalance, we will probably start trading towards these lows again. Now, yes, things can change. And yes, we may take losses on the way down. That's just part of trading, right? Part of trading is understanding that it's a probability game, right? We have to understand that there's always going to be a failure rate when we're taking these setups. As long as we are in line with our plan and our process, that's all that really matters. Bad Bush is saying that they ended the week 4R. That's awesome. And a very important part with your guys' trading is to not look at what other people are doing. Okay. It's very difficult to disconnect from that because you see people posting their payouts, you see people posting their wins, but at the end of the day, you are in control of your own trading. You are in control of the results that you're getting. And no matter what trades that you take, me, my students, anybody that's watching this stream, we could all take the same trade right now and you guys will all get different results. Some of you guys may get stopped out. Some of you guys may take a win. Some of you guys may break even because we're all going to end up managing it differently, right? Everybody's going to end up managing that trade differently. And that's the hard part about trading is you can be right on a trade, but depending on how you manage that trade, depending on your emotional state, everybody's going to have different results. And that's why trading is so individual. It's a solo game. You are in this by yourself. So even if you are being handheld by somebody, right? At the end of the day, you have to learn from that and you have to make your own decisions. Okay. I cannot make those decisions for you. Nobody can. And you're trying to find independence in the markets. You are not trying to rely on somebody else because what if something happens to the person that's feeding you the trade ideas? At the end of the day, let's say if you are following somebody and they're giving you trade signals for a whole year, right? Now, all of a sudden, throughout that whole year, you don't take any notes. You don't realize why they're taking trades. If that person just disappears, now all of a sudden, it feels like you're completely lost. And I totally get it because I've been there, right? I've been there. I've been in that situation. And then I just realized I needed to realize like I actually need to put in the work because if something happens to the people that I'm relying on to find trades, I no longer have my source of income, right? So right now we are trading into this sell side imbalance. I do want to see this market go higher still. But overall, I don't think I'm going to take a trade today. I probably should have waited for the session, but right now we don't have any news. So I'd rather just end my week, to be honest, and not put myself at risk of going back to break even. All right. So here you guys can see my funded ticks account. I'm still up 4.2%. In order to get my payout, I have to get to 6%. And I'm not in a rush. So I did take 2 full losses over the last 2 days. And maybe the next trade that I take, I'm going to size down and maybe just take 1 contract. Okay. And then on my Forex CFD challenges, maybe I'll drop down a 0.5% risk because taking 2 full losses in a row can shake your confidence. And no matter how much experience you guys get, right? Like my confidence gets shaken when I go on losing streaks. Can I explain deep 1 hour? The 1 hour, of course. Let's dive into it. So let's just walk through, everything that we've seen this week. So Monday, right? A very large consolidation. And we can tell just based on the calendar. So if we flip over to the calendar, there was nothing going on Monday, right? So I was expecting movement on Tuesday. So here, I talked to you guys last stream about the AMD setup, right? Accumulation, manipulation, distribution. This Monday range is just all accumulation, right? And then we could very clearly see that this run lower is our manipulation, right? So this is our manipulation. Once we take out the Monday range, we get a very nice displacement. This is a very nice displacement. So I did take this trade down in here, right? And I had my stop at this intraday low, right? That was protected. We ran higher, targeting the Asian range highs. If you just held this and swung it higher, right, we could have possibly gotten out on Thursday. But maybe it may be the high of the week, right? Because it's Friday. So even though I'm leaning long, I don't expect that it's going to make new highs on the week. Wednesday, right, we had a very nice fair value gap that was retested during London session. So we have this buy side imbalance here. And it's really just looking at the footprint of the market, right? So if you look at the footprint from Tuesday, who won this battle? This is a very large displacement. That's really what we're looking for continuation. We're looking for these displacement legs. This is just reaccumulation. So we have this markup. This is accumulation, or you could see it as a bull flag. Then we get another expansion that following day. Hourly, all right, we ran above that previous day's high. If you're coming to the charts, which I did on Thursday, and we see it, all the way up here, all right, we're looking for that run lower. So I went long here, expecting that maybe this is going to be the intraday low. Unfortunately, it ran lower. There is a very, very small level here on the hourly, but I'll flip over to the 4-hour and show you guys what I was looking at. So we traded down into this fair value gap and then got that nice rejection. But I was really looking at this 4-hour fair value gap. So I think as long as we respect this 4-hour fair value gap, I do want to see it trade higher. But the fact that we got this leg here, maybe this market is going to go through a period of consolidation before it gets that run higher. And this is where you're going to suffer losses, and this is where risk management is so important. You guys see this? All of this is very similar. And understanding the market conditions that you're going through, knowing that you might take losses before you get this run higher, right? It should not shake your confidence, because when markets trade higher and lower, they don't move in a straight line. They go through sideways periods, and it's managing yourself in those sideways periods that are very important, because oftentimes the best trades that you're going to take are when the markets are sideways. So when the markets are sideways, accumulating orders, these are oftentimes the best times to enter the market. But your stop loss placement is very, very important in those periods, because you don't want to enter trades after it's expanded. Those are high risk trades. So let me go through some questions here. Somebody was saying they want to break my record. I will say that do not try and put that on, your goal of things to do. Even for me, when I was trying to break Kane's record, I really wasn't trying to break Kane's record. I was just trying to trade properly and not blow my accounts up. And it so happened that I ended up breaking the record, right? So when you don't set goals like that, I find it much easier to trade. It relieves a lot of the pressure. Even if you're trying to set personal goals for yourself, you're not trying to, set weekly targets like I need to make this amount or I need to do this. You're just trying to take what the market's going to give you. So the market has already delivered me 1.5 R for the week. The plan for gold next week. Probably should have been leaning long gold, honestly. I think we talked about this on Friday. So we rejected the low here, traded higher, and then we're going from external range liquidity to external range liquidity. But now that we've taken this out, I don't know, maybe it's going to drop back into the range. keep in mind that it's still summertime. So again, my biggest thing is that I'm not trying to overtrade and I'm not trying to give too much back during the summer, just because I know sometimes summer market conditions can be kind of choppy. And that's just in general. In general, my biggest flaw is that when I get active, I get too active, which is something that I'm constantly trying to work on. And I've gotten way better at that over the years. You have to be okay, right? Taking your loss on the chin on the day and just coming back another time. Even this week, I didn't take that many trades. Weekly WO is the weekly open. So WO, this is our weekly open. So this is the price at Sunday. So again, this is a Judas swing. So we have price action trading below the weekly open, closing higher. Right? That is a bullish signature. Right? So you guys can see here that the weekly open lower, maybe closing higher. I don't know where today is gonna go. You know, if it closes bullish, I would probably still continue leaning long. But right now, the market is sideways in a consolidation on the weekly time frame. But overall, it's still creating higher highs and higher lows, right? So if this here is going to be our higher low, we have a low here, then we have this very long wick here. I'm just waiting to see maybe this weekly is going to create a swing low. And then I'm going to still most likely be leaning long for some weeks to come. But obviously trying to lean long in a smart manner. I may take losses along the way, and that's just part of it. ICT is going to turn the algo on back in September. Yeah. Thoughts on NQ? I don't really have any thoughts on NQ right now. I missed this trade. So we got this nice bullish engulfing candle here. This trade here, ES and NQ, could have went long right at the open. So if you guys are trading futures accounts, you know about the rollover. So the rollover, you can start trading at 6 p.m. If you went long at 6 p.m., right, this would have carried you higher into next day. But then you need a time of day exit. So, you know, if you're swinging long overnight and then you're coming to the screens like right before the open and you're up, you may want to trim that position. Okay. So I'm always making decisions around these session rollovers. So if I'm holding a trade through London and I come to New York and I'm up in profit, it's very important that you take something off the table or you reduce risk, right? Me, I sound tired. I'm always tired, man. I train hard and I don't, sometimes I don't get enough sleep. Plus I'm traveling in the next 2 weeks, so I'm trying to get a lot of work done before I leave. Just because I'm not going to be home in my studio. But I still will be trading, obviously, on the road. The weekly indicator is ICT everything. ICT everything will give you these day separators. It'll give you the Asian ranges. And that's it. The risk management of my Apex account journey. I started out slow. Well, no, I wouldn't say I started out slow. My goal was to try and get that intraday trailing drawdown to stop as fast as possible because that was a huge handicap. But once it stops, I still took it slow. And then as I built up capital, right, once I got to I was risking like $250, $500 to start. But because the index markets were moving like 1,000 points a day, like if we go back to the beginning of the year, right, these markets were moving a lot. So in a couple days, I got the intraday trailing to stop. But once I got past that, right, I wanted to build up a buffer at least 10K before I started risking $500, right? Because I'm always thinking I want to give myself at least 20 to 30 trades before I blow those accounts. And then when I got to like 20K, then I started risking $1,000 per trade, right? And I never really went past that. I know it's probably hard to like fathom because all those accounts made it to like $120,000 in profit each, which is like, it ends up being like 120 R, but it's like 120 R over the course of 3 months. But it's still wild to think that I even produced that type of return. Because if I were to try and do that, even just a month later, let's say I started that journey a month later, 2 months later, I don't think I would have broken the record because the market conditions changed and it started going sideways on me. So if I go to NQ, right, if I just try to do it, even starting from here, it would have been much harder because outside of like a couple days, like this day here, I don't know if you guys were paying attention to this day here. This was running overnight and I was not positioned for this. But all these other days, they were making the moves during the session. And then all of this is just sideways. So like if I try to break the record in any of this sideways price action, or even this has been a very, very tight range and difficult to trade unless you're trading the very low time frames. So I haven't really been too active in index markets, to be honest. Just for the fact that we're at all-time highs. I'm not trying to predict that it's going to continue just pumping higher. And I'm trying to be very careful about how much risk I'm putting on. I don't have end of year goals. I take what the market gives me. I don't even have daily or weekly goals. I just show up to the charts. If the trade moves in my favor, I manage it. If it doesn't, I cut the risk and I just move on to the next trade. But I do not set goals like that because if you fall short of the goals, now all of a sudden you're going to try and catch up, right? And playing catch up in the markets is not good. Okay. Guys, type a 1 in the chat if you are the type of trader that if you don't hit your daily or weekly goal, now all of a sudden you're in front of the screens, trading, and you pile on the losses, right? Type a 1 in the chat if that's you. And then all of a sudden at the end of the day, you say, I should have just taken my 1 loss and walked away because that was my plan. But instead, I'm trying to hit these goals, and then I end up doing more damage to my accounts. I already told you guys what I was looking at gold. We already purged the liquidity up here. I'm not doing anything with it. So like when we're looking at gold, we need to, or any chart in general, you need to understand that we need imbalance in the markets and we need a proper target to trade to. But now that this low has been taken out and then this high has been taken out, where's the next target? That's when you need to be careful because it could retrace lower before going higher, or it could keep going higher. But I'm not looking for those types of scenarios. I'm looking for scenarios that are very clear. A high time frame just keeps you aligned with what you're trying to do. Because when you're trading on the low time frame only, there's so many signals that appear that are conflicting. Yeah, more hours trade, and it's something that I talked about with Paulina on the psychology session. Trading is like the one it's like the one profession where more hours does not result in more money. Every job that you're used to putting in more hours, getting rewarded for that. And that's something that I had to learn, and every trader is going to have to learn, is that more hours don't necessarily equate to more money. For me, it's actually the opposite. More hours typically end in less money. So outside of me streaming with you guys and outside of me streaming with my community, I'm only on the charts for like 2 to 3 hours a day because I know I can only remain so focused for X amount of hours. When was the last time I blew up an account? It's been a while. It's been a long time. Maybe a year ago. But they're prop accounts. Like, you know, if I lose $1,000, $2,000, even $5,000, it's not killing me. My bias on indices, for me, it's sideways. Sideways to drifting higher. I'm looking for days where it's like when I look at the daily candle, I know exactly where it's going to go. But after yesterday's close, I don't know where this is going to go. Is it good to take a stop loss if I didn't get your 1 to 3? Yeah, if you followed your rules. You're going to have you're going to have so many stop losses in your career. You have to get comfortable taking stops. If you're not comfortable taking stops, you should not be trading. I want to bring up something that I think is very, very important for you guys. Look at this. I want you guys to look at this for quite some time, and we'll talk about it. So with the risk reward and win rate, right? A 30% risk, 30% win rate. If you're aiming for a 3 to 1, you're still profitable. But that means that you're going to lose on 70% of your trades. 70% of your trades will be losses. And you have to be comfortable with that. Even 40% of your trades. That means you are going to be wrong a lot. Okay? You're going to be wrong a lot in your career, and you have to get comfortable with it. Even if you're operating over here where a 1 to 1 is profitable, 60%, a 60% win rate, you are going to lose on 40% of your trades. And that's not something that a lot of people talk about. A lot of people don't talk about the fact that I'm losing on 40% of my trades. I just lost 2 trades in a row. Is it shaking my confidence? Not really. Well, I know that my week is done. I'm going to wrap my week up and be profitable. So when we're looking at this, right, you have to set aside your ego because you are going to be wrong, and you're going to be wrong a lot throughout your career. Where I think most people, most traders, if they're not profitable right now, they think that they're going to find some specific holy grail, and all of a sudden they're going to be winning on 100% of the trades. So that leads them to oversize on their trades. It leads them to make stupid decisions. And overall, they just have this ego that they're carrying with them in the markets that they can't shake. No, I don't set weekly goals. I don't set weekly goals. When you set weekly goals, again, if you fall short of that goal on Thursday, how many of you guys are breaking rules on Friday to try and meet those weekly goals? All right, that is not how you should be approaching trading. Because you're not comfortable sitting with drawdown, and you're not comfortable sitting in losses, and you're not comfortable not meeting those goals. I mean, a lot of these markets right now, I don't know where they're going to go. Like, I'm still leaning bearish on the dollar. But I'm kind of waiting for this weekly candle to close. So we ran above this weekly high, rejected. If we get a bearish close here, I'm still going to be leaning bearish on the dollar. Guys, please stop spamming the chat. I've already gone through a lot of what you're talking about. What's my favorite Pokemon? Probably Pikachu. How do I trade all my accounts at the same time? I use a trade copier. The risk I take at a prop firm account has nothing to do with what you guys are doing. If you're trying to pass a prop firm account, you have to understand what your stats are. What are your stats? What do they look like? What does your journal look like? Because I know many of you out there are trying to take too much risk to try and pass the accounts. So 0 to funded is saying I'm up 1.32% for the week. Is that all right? It depends. How much risk did you take to make that 1.32%? And did you follow all your rules to make that 1.32%? Because if you broke all your rules and still ended the week green, that is reinforcing bad habits, right? You see where I'm going with this? Whereas if you followed all your rules and ended in the red, to me, that's how you should be grading your week. If I followed all my rules and ended in the red, that is still better than a week where I ended in the green and broke all my rules. Because it's longevity. You're looking for longevity. You're looking to follow rules and the structure of your trades. Because long term, if you continuously break your rules, that 1.32% week is going to get erased in the next couple days if you trade poorly. If you continue trading poorly, the 1.32% will get erased very quickly. How to calm the monkey mind? You need to meditate. You need to meditate. And it's, when I first started meditating, I was like, this is dumb. Until I sat with myself in my own mind, my own thoughts for a little bit of time, you're going to recognize that first session that you sit down, you're going to notice your mind bouncing all over the place. You're going to be thinking about all these different things. It's not even going to be just about trading. You're going to be thinking about your life situation, things that are going on around you. And you have to be able to sit still, right? So as you get more and more practiced with meditation, you will slowly understand that you need to have a calm mind in the markets. Bunny, please stop asking about gold. I already talked about gold. We've already taken out a high. You want to chase the market? Go ahead. I'm not telling you to chase the market, and that's why I'm not looking at gold, because we've already purged the liquidity that should have been the target. So for the week, if you weren't in down here, now is not the time to get in. Because I can tell right now that you have FOMO because it's going up. It's up 1.3%. You want to chase the market higher. But that is not profitable trading. Because this is exactly what is going to happen to you long term if you're chasing markets after they're taking out highs. Right? We take out a high, you think it's going to just run to the moon, and then the next day it just completely dies. Right? So the target's already been taken. How do I solve the problem of fearing to enter a trade? By looking at this. By looking at the risk reward. This helps me not be fearful. The fact that I know that I'm placing my risk, the whole point of having a stop loss, guys, is that you are calculating how much risk you're taking before you take the trade. Before you take the trade, you should understand that maybe this trade is going to end up being a loss. And that's how I stay consistent and not fear taking that next trade. Because having the stop loss is my worst case scenario. My worst case scenario is I lose X amount of dollars or X amount of percent. But I don't even really look at dollars and percent like that. I just assume I'm taking a 1R loss. Now, that 1R loss could be a various degree of percentage risk or dollar amount risk. It's still a 1R loss, whether I take, one lot on it, or I take a micro lot on it, or if I take 10 lots on it. A 1R loss is a 1R loss. Is 5%, again, this is the same question. Is 5% a month good ROI? That depends. If you broke all your rules to make the 5% a month, that is not good. That is not a good month. I don't care if you're up 10%, 20%. If you break all your rules doing that, trying to do that, at some point you are going to blow up the account. And I'm talking to you guys from experience because that's happened to me. I've been up months where I'm up 30%, 40% in my personal account, broke every rule in the book, and then the next month I give back all the gains, and then I'm in the red. So again, do not look at the outcome of your months. Do not look at the outcome of your trades. The most important thing is that you're following a process and you're following the rules that you have. If you say that I'm going to take 2 trades today, you end up taking 5 to 10. That is not proper trading to me. There's no discipline there. And I don't care how much money you make or lose, you're not following the rules, right? That is the discipline that you need to develop in trading. Because there's not a lot of traders out there that can take a loss and just step away for the day, right? You're trying to put yourself in the top 10% of traders, top 5%, top 1%. They don't operate like that. They're not just in here just willy-nilly gambling on every setup that appears. And they're not out here just willy-nilly breaking all their rules. Yes, we break rules, but we get back in line with our process very quickly. Okay? Whereas amateur traders, they don't know how to get back in sync with that. They go on tilt, they start breaking their rules, and now all of a sudden 2, 3, 4 weeks have gone by and they're consistently breaking rules. And they can't get out of that rut. Yeah, Jay still is saying he caught his gold buys early this week. Yesterday created the high of the week, possibly. But that is exactly what you're trying to do in these markets. If it hits your target, you know, I go flat. Same thing when I'm looking at NQ. I was targeting these equal lows down here. After we take out those lows, I go flat. You guys can see here, after we take out that low, it goes sideways for 2 days. And then we get this very large bullish engulfing candle, right? Because that's where I'm not trying to chase the market. If we've hit a higher time frame target, I'll sit still for days, right? Do I use limits or market orders? I mainly use market orders. I don't like using limits. You've had your eval account for 3 months and you risk 0.3% per trade. What's your advice? Well, what are you struggling with? What are you struggling with? You have to list these things out and learn and figure out what you need to improve upon. Are you breaking rules? Right? Are you entering too late? Are you managing your stops too aggressively? This is the hard part about trading, is like people don't recognize that it's a very deep skill set. Right? There are many, many things that you need to work on. But you have to figure out what your weakest area is. Like, what are you struggling with the most? Can I walk you guys through picking days to trade based on the calendar? Yeah. I mean, when I look at this, I'm just trying to figure out what are the days that I'm trying to be most active. And it's usually around days like this where it's just ISM or unemployment claims, where there's like one red folder news that is not crazy. So I'm avoiding CPI, I'm avoiding FOMC. When we have very important news events, I tend to wait it out until that news event is out of the way. It seems like a lot of you guys are showing up late, and I've already covered a lot of the markets. So I'm not going to just keep going over and over and over again. You guys can rewind the stream if you want, because I already talked about NQ. Yeah, basically with FX, I trade any time of the day because I'm more of a swing trader with FX. So I basically look at every 4-hour closure. How much do I risk per trade? Why does it matter? You know, I'm gonna throw the question back on you guys: is how much do I risk on a trade? Does that have any impact on what you're gonna do? It should have no impact on what you're doing. If I take $100 trade and you take $1,000 trade, and it's the same trade, does it really matter? If we go long right now in the euro and I put my stop loss here, and my take profit all the way up here, does it really matter what size I take? One person can be taking 1 lot. Another person can be taking 10 lots. Another person can be taking 100 lots. If it goes to the target, it goes to the target. One person's going to make $1,000. One person's going to make $10,000. Another person's going to make $100,000. So many noobs here. Listen, I get it. Trading has a low barrier to entry, and I was there. I was in that same spot too. So I totally get the questions, and these are questions that honestly I asked for many, many years, and I totally get the position that you might be in. Maybe you've been trading for a couple of years, you're still asking the same questions, and I'm here to tell you that you guys are focused on the wrong things. And that is honestly the holy grail. When you recognize that you've been focused on the wrong things for way too long, right? You're focused on all the things that don't really matter, right? How much risk do I take? Is a positive outcome on the month, is that good? I don't know if it's good. Did you break rules doing that? Those are the questions that you need to ask. Am I actually focused on the things that actually make a difference in my trading long term? Maz is asking, I have this crazy psychological problem. I trade like a god for days straight, and then I continuously take losses and turns into a downward spiral where I blow my account. How do I overcome this? It is overconfidence. So like I talked about, I don't know, I'm pretty sure I talked about it last week or, before, but your emotional volatility. Because on a win streak, your volatility looks like this, or your confidence level looks like this. Then when you take losses, it looks like this, right? So your emotions are up, down, up, down, up, down. Whereas professional traders, we operate like this, regardless of if we're winning or losing. Did I follow the plan? This is where you need to get to, right? And the only way that I got to this was recognizing my emotions. When you recognize your emotions and your triggers, this is how you operate in the state of calm. Skincare routine? No Diddy. I don't really have a skincare routine. Shower. Be Asian. Man. Oh, looks like a lot of you guys are leaning long for the day. I'm sideways. How do I overcome hesitation? Again, if you guys showed up late, this is how you overcome hesitation. You overcome hesitation by understanding that you're going to take losses. Just put the trade on. If it ends up being a loss, it ends up being a loss. And that's what a lot of people will never get past that point because they're not comfortable taking losses. Your guys' ego is so big that you can't take a loss, and you want to fight the market for every dime and dollar. You take a loss, you're like, no, I'm right about this trade. I'm going to prove to the market that I'm right about this trade. But the market, again, does not care about your opinion. That alone is going to take you some time. Some people are going to get it sooner than others. For me, it almost took 10 years. So I know that it's one of the hardest things to overcome. To learn how to humble yourself and know that you're going to be wrong on 50% of the trades that you take. Maybe more. I just had 2 losers in a row. I took a loss yesterday and today. But is it going to shake my confidence? No. I'm just going to size down and take the next trade as it comes. Right? You have to operate fearless. I may take another loss on the next trade. I don't know. But again, I don't really care. Because over a specific sample size, if I manage my risk and I flatline my equity curve, so let's say if I'm on the up right now and I take 2 losses, where do I go from here? Where do I go from here? This is where we're at right now. I'm going to draw this out. Right? This is what your equity curve looks like after taking 2 losses. How do you respond to that? Where do I go from here, guys? Either I break my rules and I overtrade, I overleverage, I revenge trade, or I stick to my plan. I don't do any of those things, right? Manage my risk. These are the two paths that you're going to end up taking on a losing streak. Which one are you going to take? Where are you going to go from here? Right? Because I can tell you, even if I follow my rules and do this, stick to my plan, manage risk, it could still keep going lower. But when I break my rules and I over leverage, instead of me trying to flatline this equity curve and look like that, it ends up looking like this. Right? You might get those certain opportunities where, or those certain times where it looks like this, but then if you continue doing this, it's very likely that you're going to end up like down here again. Because again, that's not sustainable. This is not sustainable long term. How to know the daily bias? You're never going to know the daily bias. You just have an opinion. And that's all we're doing is we're trying to trade our opinions of the market. But again, the market does not care about your opinion. So when you're developing the daily bias, you just have an idea of where the market's going to go. But again, 50% of the time or more, you're going to be wrong. And you have to be okay with that. And it's about trading on the days where you're more confident. So if I'm 60%, 70% confident, I'm going to take that trade. Right? If I'm over here where I'm 30% confident on a daily bias, I don't take the trade. Right? I just avoid it. Or maybe if I take an early loss, I don't go back into the market. All right? Because I've seen days where I'm extremely, extremely confident about the daily bias. And then I oversize and I take a loss. And I'm like, why didn't it go in the direction that I was expecting? It's because I'm not aligned with this when I start my day. I'm not aligned with this. And the probabilities that if I put on risk, I might take a loss. So if I always consider the opposite side of a trade, I have nothing to worry about, right? Yeah, and you guys are seeing me stream on Fridays, which I don't do a lot of live trading on Fridays. Maybe in the future, you guys will see me streaming during the week, but I stream live for my community during the week, and I talked about trades that we had here. Let's see. Maybe I could share with you guys some of the trades that I took. So I'll show you guys the trade that I took here. There's this 8-6. So I went long inside the fair value gap. All right, we have Friday's intraday low. We have this inverted fair value gap here, and I went long here. You guys can see here that this is the 4-hour fair value gap here. Right, it ran higher. And this is the part of trading right here that you guys are very uncomfortable with. Right, it starts moving in your direction, it goes against you. And it feels like you're going to get stopped out. Right, I went halfway into my drawdown, or halfway into my stop. Right, but I left it alone. All right, so all of this gets very uncomfortable. You get very, very uncomfortable sitting through all this. But part of sitting in all this is understanding that the markets are uncertain. Once you enter that trade, you can't do anything about it. I can't force the trade to move higher. I can't force it to move lower. I don't know how long it's going to go sideways before it makes that run higher. All right, so I exited the trade at about 2R. I think 1.75R. Well, I don't know if it's really going to make it to 1.75R. I really don't know. And I exited based on time, but I can't control all of this price action in here. The only thing I can control is my emotions and how I feel when I'm in the trade. Right? Again, your emotional volatility is very important. So I'm trying to operate in a state of calm. I'm not trying to be all the way up here elated when the market's moving in my favor. I'm not trying to be down here when it's moving against me. How can you improve timing? It's very difficult to do because that's what we're trying to do, is time the market. But again, you could have very good timing, but still lose on the trade. I think the more important thing is that you're following the process. Like, go through your data and figure out what times you're losing the most and what times you're not. Right? I try and trade around kill zones, and I try and trade when the market really is completely obvious to me. So going over why I'm not taking a position right now is because I'm short on the dollar, but we're trading into this buy side imbalance here. But I'm not bullish on the dollar right now. So, you know, if it starts to turn around, I would say maybe it's going to go out to these equal highs here. But I'm not fully confident in that yet. Why do I depend on liquidity sweeps? Well, you don't know when you look at a chart, Sammy, you don't know what retail is and institutional. I don't know. Right? All I see is a level of stops being hit. I don't know if that's institutional or retail. It could be both. Right? So the importance is, like, how does the market respond after taking out those stops? Right? We took out all this liquidity up here and then it completely rejected. That's why I was leaning short. I don't know who's operating up here. It's a combination of retail and institution. What time do I start my trading day pre-London? No. I do sleep. So again, I think if the dollar does get a bounce, we might go to this liquidity up here. But again, I'm not trying to be, I don't want to be bearish right now on the euro. So what do? I just wait. So if I'm waiting, maybe we're going to tap into this fair value gap here before I try and position myself long again. But until then, it's a waiting game for me. Okay, I'm not trying to trade every single little movement. All right, I'm trying to trade when it's extremely obvious. And when it's not extremely obvious, that's where a lot of you guys fail. Because you're taking trades that you think are obvious because you're FOMOing into it and you're like, this is going to be a huge move. But I know long term that does not work for me. What do I do outside of trading and work? I go paintballing. I'm getting into collecting Pokemon cards. I work out. And I just try and enjoy my life, man. Because I don't want to be a slave to the screens. When I first went full-time trading, I thought I would just sit in front of the desk all day long and make as much money as possible. Until a couple months went by. Like, I had a couple really good months as soon as I went full-time. And I spent more and more time in front of the charts. So when I spent more and more time in front of the charts, I realized I wasn't making more and more money. There would be days where I spent 8 hours in front of the charts. I came away with a break even. Right? So more time in front of the charts does not always equate to more money. I try and spend the least amount of time on the charts. Yeah, real estate. I've got my education business. And I'm trying to add more streams of income. Less is more, yeah. I totally agree. I totally agree that less is more. Because some of my biggest months were probably the least amount of time spent in the markets. Because the markets, again, are doing all the heavy lifting. What kind of meditation do? I use this site, Headspace. These are all guided meditations. So let me just show you guys what it looks like. Ever loads. On. Workouts really help because it trains my body. Yeah, of course. Like when I have a bad day, even a good day, I get a really good workout in. So I usually come in here and they have all these different series, right? These are a lot of this, is very trading related. Letting go of stress, managing anxiety, finding focus, patience, fear of the future. All of these are very good. So if I go in here, they have like 10 episodes. I can choose how long I want to meditate for. So if I click on this, I can change how long this is going to be, right? So originally I started with 10 minutes and I had to work my way up because I found that 10 minutes even was too long, right? When 10 minutes, if you've ever meditated, 10 minutes feels like an eternity. Because why? You have anxiety, right? So when you have anxiety, it's very difficult to sit still and do nothing. Karub is saying, this is a great question. Can you explain why most traders fail? Incomplete education or not handling emotions? Not handling emotions. 100 for me, it's not handling emotions. I think many traders out there have what they need to become profitable. And I'm saying that because I had what I needed to become profitable. Some of the setups that I use now are things that I learned like my first week into trading. I learned about these engulfing candles my first week into trading. I didn't know how to properly trade them for years because I didn't recognize that my emotions were holding me back. How I felt in the trade. When I put risk on, how do I feel? Nobody can teach you that. I could talk about it as much as I want, but we're not the same person. I can't put myself in your shoes. You can't put yourself in my shoes. Right? How do you handle the emotions when you put on risk? How do you handle it when the markets start going against you? Like when I pull up this trade. When I just look at this trade, how do you handle yourself when the market's doing this? Right? How do you handle yourself when the market's going higher and then it goes sideways again? All of that uncertainty and emotions that build up as you're in the trade is very difficult. And I think over time you learn how to deal with it, but not everybody's going to be able to, because it's one of the biggest hurdles that I had to go through and what most traders have to go through is learning how to deal with the emotions of what it looks like when that market is going sideways. Guys, I can see your questions. I'm not going to just answer every single one of them. How many minutes do I meditate every day? Every day. At least once a day for 10 to 20 minutes. You don't have to spam the chat, guys. And if I don't answer you, it's because you're asking a very basic question that if you guys use a little bit of brain power, you can figure it out on your own, right? Because trading, again, is independent thinking. You shouldn't need to have somebody else telling you what to do in the markets. Because if I told you exactly what to do in the markets, you're not really learning from that, are you? Which I encourage all my students to take their own trades too. They follow my trade ideas. Yes. But you're going to learn more if you take your own trades and fail and learn from those situations than if you take my trades and I fail, because you're like, now you have a scapegoat. And that's what I did for a very long time. I took a trade based on somebody else's analysis that I saw online. I took a loss, and then I didn't learn anything on my own. I just blamed the other guy, right? No, I'm not taking a trade. And some of you guys are probably going to be like, this guy doesn't trade live. No, I only trade live when it makes the most sense. Because I don't trade a lot. I do not trade a lot, and I try not to trade a lot. Because when you have open exposure in the markets, right, you're also opening yourself up for the market to take your money. So when it's not completely obvious to me on the high time frame, on the daily, I don't take a trade. And when I scroll through my charts right now on the daily time frame, right, none of this really seems like a home run trade. Like, I'm going to take this trade and it's definitely going to work out. I will let you know when I have a trade idea that is like very clear. But I already talked about what I was looking for Friday. Okay, I'm just not streaming every day. But I did tell you guys what I was looking for on Friday, did I not? I went through exactly, word for word, what I was looking for. We looked at the calendar, didn't we? We looked at the calendar. I told you guys I was looking for a long, probably Tuesday or Wednesday, if we get a retracement. We got the retracement. How many of you guys position yourself based on what I talked about? Or how many of you guys bailed on the idea because you thought I was going to be wrong? It did exactly what I wanted, okay? But the fact that you don't see me trade it live does not mean that I'm a bad trader, right? It just means that you need to learn how to execute on that idea. But you also need to learn how to build the idea on your own, right? How do I build a proper idea? How do I come up with the right context? And how do I operate in the market? Which setup or strategy is the most that I use? The fair value gap. So if I don't see a high time frame fair value gap, I typically won't trade it. Or an engulfing candle. Fair value gaps and engulfing candles. So here, right, after we took out Monday's high, we get a very nice, I wouldn't say it's quite an engulfing candle because we didn't take out the low. But this candle here took out the high, which is what, guys? This is the liquidity rate on a low time frame. And then it trades lower. This is an engulfing candle. We take out the high, and then it trades lower. But again, just for the fact that I'm not taking setups live with you right now, I'm showing you guys the thought process that goes into my trading. Because I outlined what I was expecting to a T, right? And it panned out. If it didn't pan out, I'm still going to follow that process. So I ended my week with plus 1.5 R. Nothing to write home about. But what I am really proud of is that I followed all of my rules. Okay, so starting this stream, I took 2 losses. I'm not going to all of a sudden just break my rules and trade live in front of you guys because you want to see me trade live. All right? That is not professional. If you were to do that, let's say if I were to offer you a job right now to be a trader, I'm hiring you to be a trader. I'm not hiring you to live stream in front of people. But you are live streaming in front of people, and you're managing my money. And you tell me that you're not going to take a trade. Now, all of a sudden, I see you on stream taking a trade. I'm going to fire you on the spot. Or I'm going to give you a strike, right? 3 strikes, you're out. That's what's important, okay? If you follow the rules that you say you're going to do. Again, I'm not going to sit in front of the charts and trade live for you guys just because you want to see me trade live. I'm here following my rules, all right? That's all it is. That's all what the name of this game is, having a plan and following a plan. That's all it is. And you guys, I say this from experience again. because you're deviating from that plan, right? So when your equity curve goes like this, and then you take a couple losses, right? Where does this branch off into? Do I break my rules and trade because people want to see me trade and I want to see myself trade and I want to prove people wrong? Or do I follow my rules and flatline my equity curve? You have two paths that you're going to take, guys. You can't just keep taking the bad path and expect to get to the destination that you're trying to get to, right? This is a steep path over here with lots of hazards. And those people tend to fall off the mountain and die. Right? There's an analogy for you guys. How would I approach a 50K funding ticks eval to payout? Well, let's look at the funding ticks plans. Let's look at 50K. Are you doing Pro Plus or are you doing Zero? So let's talk about let's talk about Pro Plus. So eval, right? You've got $2,000 daily drawdown limit to make $2,500. I wouldn't be risking more than $100 per trade, which you'd have to trade micros. You got to trade either micro euro contracts, micro index contracts to get to that $100 risk. Unless you're very well versed in trading, because then you can have 10, give yourself 10 trades and risk $200 per trade. But it's a tight stop loss, right? You're giving yourself $2,000. So you have to figure out how many trades do I want to take before blowing the account. Because you have to understand, again, that your emotions are going to come up when you go down $500, when you go down $750, when you go down $1,000. That is where the real test is of your mental fortitude and your strategy. Do you trust your strategy enough to continue trading in that drawdown or manage your risk appropriately to not make mistakes and blow the account? Christian? Yo, Christian, what's good, man? They have a plan to visit India? Nah, not anytime soon, man. I got a lot of other places I want to go to. I'm pretty busy. I already talked about the gold chart. If you guys miss gold, just go back. Just rewind it. But yeah, I'm probably not going to stay on here too much longer. It's interesting to see that you guys have very strong bias today. I think we need to add a poll. Can we add the poll for neutral? That would be great. If I could add a poll for neutral, that would be awesome. And maybe that's something that a lot of traders don't know how to do, is filter out the days where you don't do anything, which I think is more important. If we could run a poll, I'd love to see how many people are neutral in the markets. Because if I see people that can sit still, I already know these people have a much better chance of making it, rather than trying to force a bias every single day. So how does the dollar play a role in comparison with euro dollar? Well, just look at the name of the symbol, right? So the way that this market moves is based on the dollar. So I'm going to just draw this out. If the dollar goes up, so let's say if the dollar goes up, what does euro tend to do? Euro USD tends to go down. Okay, so the suffix in this pair name has an impact on what this market does. So if the dollar is strong, euro dollar goes down because that's the exchange rate. If you go to Europe and you're exchanging your dollar for euros, if the dollar is extremely strong, right, you're going to get more euros for your dollar. But if the dollar is weak, you're going to get less euros for your dollar. Does that make sense? That's how it has an impact. When you're exchanging currencies, that's what you're trading. You're trading Forex. You're trading the exchange rate. Moneybread's ignoring. What am I ignoring? Gold? Or what? No, usually when I'm neutral, I don't take a trade. Yeah, Gon Brabic is saying he hasn't taken a trade for 2 weeks and it's frustrating. Welcome to trading, brother. Welcome to trading. And that's why I have a basket of markets, is because if I don't find something in one market, I'll find something in another. But there are times where I don't see anything in any market. Right now, I don't see anything in any market. Bitcoin. So Bitcoin is most likely going to be reliant on if we trade away from this level here. If we trade away from this buy-side imbalance. Now, this market's still creating higher highs, higher lows. And if it does get above this down close candle, I would expect it's going to continue higher. But again, the opposite side of that is if it digs into this and it flips this buy-side imbalance, then maybe we're going to target the liquidity down here. All right, so I'm always coming up with two different scenarios. But right now, it's just an inside week. And what you guys will learn over time is that inside weeks tend not to be the best weeks. You know, there's not really anything for real traders to do. Because right now, it's just indecision. And that's what inside candles do. They just, you know, it's indecision. But let's say if we get the inside candle and the next week prints higher, well, then the next week after that will likely continue higher. All right? Because if we just draw this out, this is just a consolidation. Okay? Based on the previous week. So based on that previous week, right? We're basically at 50% of that previous week. So if I draw out the range, you know, where does it go from here? I don't know. Do I play Call of Duty? I used to play Call of Duty a lot. A lot, man. But I tend not to play too many video games now. I still play them, but I find playing too much is detrimental to my health. Like, yes, it's good for your mental health at times, but I think if you sink too much time into video games, it's not very good, you know? No, I'm not trading anything today. It feels like the market wants to go lower on NQ. Maybe fill in this fair value gap here. But like I mentioned, I'm not taking any trades because it's not in my plan to take any trades. And again, I'm not taking trades just to show to you guys that I can take trades. Not in my plan, and I'm not going to do it. And that's just me being disciplined. All right. Because it's a skill set, guys. It's a skill set to say, I'm not going to take any trades today and actually stick to that. Yeah, no. Arcane's saying, do you not trade once I decide not to trade, or could something present itself? No, I do not take a trade. Because, you know, speaking from experience, and you guys can type one in the chat, if you say you're not going to take a trade, and you see a trade, and you take it, and it ends up being a loss, right? Because things aren't aligned. I don't care if it ends up being a winner. I'm still breaking the rules. Because I've seen setups appear, and they fail. Okay, so just because something presents itself does not mean I take the trade. Because that's the failure rate. Setups are going to fail. The best setup I have is fair value gap. It fails probably 40% of the time. 40% of the time, those fair value gaps do not work. Maybe not 40%, maybe less. But a lot of the times, right? And I don't want to take the risk. Because it's not in my plan. And if I sit in front of the charts and just force myself to find a setup, that is not profitable trading. I cannot find a profitable trader that does that. That will sit in front of the screens until they find a setup. Because on days where I typically tend not to trade, those days present A+ setups. A+ setups. They look like A+ setups. And then they go straight to your stop loss. And you're like, I should have not taken the trade. Right? So your filters are extremely important. If I don't see anything on the high time frame that really makes sense, I don't take the trade, guys. All right. days like this make me want to pick up a hobby. Yeah, it's important. So like overall, I think if we respect this low in here and then this buy side imbalance, I would expect that the market's going to continue higher. But I don't need to rush into the market. Okay. If it's going to go up to these highs up here, which I think it will, I've got plenty of time to get long. I have multiple days most likely to get long before it makes that run higher, especially if it's going to continue higher from where we are. But I'm probably going to hop off here, guys. You know, it's been a pleasure chatting with you all. And I kind of want to keep it short because I think these sessions are, you know, I think jam-packed with a lot. So the longer I stay on, I want you guys to maybe, you know, rewatch the stream and understand that I'm so process-based that I don't care what the markets are doing. Like the markets are going to do what they're going to do. And it's how do I approach the markets week in, week out. That is the most important. Because I did exactly what I said I was going to do last week. On Friday, I told you guys exactly what I was looking for. And we got that. How many of you guys took the trade going long on the euro and going short on the dollar based on what I told you guys on Friday? If you did that and took a loss, you're still way ahead of the people that are breaking the rules and making money, right? And that's a paradox shift. Just because somebody's making money does not mean they're a good trader. All right, I'd rather you follow a plan and a process, which I outlined it for you guys. I outlined the plan and the process, what we're looking for this week. That exact setup panned out. Okay. If you took a loss, that's totally fine. You have some stop loss placement to work on. You have some timing to work on, but you got everything else right. Versus somebody that is breaking all the rules, taking 100 trades in a day and coming out ahead. You can't look at those people and be like, this guy knows how to trade. Because I could look at that person and be like, this guy doesn't know what he's doing. This guy's a gambler. Right? And if I were to start a fund, I'm going to hire the person that's actually following the rules rather than the person that's just out here just throwing darts at a board. Okay? So I'm going to end the stream here, guys. I will see you guys all next Friday. I hope you all have a great weekend and I hope you guys learned something from this. You know, drop a comment below. Make sure you subscribe to Tradin TV. Make sure you follow me on Kick if you can. And I'll see you guys all next week. All right? Take care.